China's trade surplus widened in the month of April as import growth for the country slowed, casting doubts over the state of the world's second biggest economy. The country recorded a better than expected surplus of $18.4 billion in April, and an anemic growth in imports covered weak exports, which continues to be hit by difficulties in Europe, China's biggest market. Imports edged up just 0.3% year-on-year to $144.8 billion in April, raising questions about the government's ability to boost domestic demand as it tries to rebalance the economy away from export dependence. All right, let's keep the focus on China and the Asia region, and we've got Bill Belcher, who's Chief Global Economist at Mirae Asset Securities, joining us on the show from Hong Kong with his assessment of the Chinese economy. Now, Bill, to begin with, the China trade data is out. The trend is surplus is narrowing. So what does this really say about the rebalancing in China's economy, and what does it say about the level for the yuan?
Well, I think what you were meant to say was that the trade surplus is expanding, and it is expanding, but the problem is the composition. Exports slowed down, were disappointingly slow, well below market consensus, but imports were even weaker. And that suggests that the Chinese economy, rather than stabilizing, as some have said, or even beginning to turn around, is continuing to slow down. And so the slowdown has not been arrested yet, and it's certainly not over.
Right. Also, Bill, China's inflation data is out tomorrow. What should we expect?
I think we're expecting inflation to be at 3.5%. Why is that? It's certainly because when we look at the food prices, particularly vegetables and fats and oils, have begun to pick up again, and that's going to boost inflation a little bit for April. But as we look out, we see inflation falling to below 2.5% by July.